Right now, as we speak, Vera Bradley Inc. is trading at exactly $3.11 US dollars, having surged up by $0.23, marking a significant 7.99% intraday gain. If you were just glancing at the ticker, you might dismiss this as typical volatility in the consumer discretionary sector, or perhaps a dead cat bounce in a name that has struggled to find its footing for years. That would be the easy assumption, the expectation that the market has written off this quilted handbag empire as a relic of the past. But the reality of what is happening on the tape today suggests something far more aggressive is at play under the surface. We are not just seeing a random fluctuation, we are potentially witnessing the early stages of a structural repricing or a short squeeze that has been coiling for months. The volume hitting the tape right now is anomalous. It is not just casual retail buying. The order flow suggests that someone is in a hurry to accumulate, or perhaps someone who bet against this company is being forced to cover their tracks in a panic. When you look at a move of nearly 8% in a single session for a stock like Vera Bradley, you have to look past the headline number and ask, who is driving the bus? The expectation for Vera Bradley has been overwhelmingly negative for a long time. The narrative is that the brand is tired, that Project Restoration is moving too slowly, and that the acquisition of Pura Vida was a capital allocation mistake that is dragging down the balance sheet. That is what the bears believe. That is why the short interest has remained stubbornly high. But the reality that is smacking short sellers in the face today is that the company is sitting on a debt-free balance sheet with a market cap that is arguably trading below its liquidation value in a worst-case scenario. The market hates uncertainty, but it hates being wrong even more. And today's price action at $3.11 is the market admitting it might have miscalculated the floor. Let's look at the mechanics of this move. Throughout the morning session, we saw steady buying pressure that didn't fade during the usual lunch hour lull. Typically, in a weak stock, you get a morning pop followed by a slow bleed as day traders take their pennies and run. That isn't happening here. The bid support at $3 and $3.05 has been rock solid. Every time the price dips a few cents, it gets scooped up. This behavior often indicates that an institutional buyer or a significant activist is building a position, carefully soaking up liquidity without trying to spike the price too hard, too fast. But because the float is relatively tight and the short interest is crowded, they are inadvertently squeezing the price higher. For those of you watching this on your Fidelity mobile app or checking your Robinhood stock trading dashboard, you might notice that the relative strength index on the hourly chart is pushing into overbought territory. But do not let that scare you off immediately. In a breakout scenario like this, momentum indicators can stay overbought for days while the price continues to grind higher. If you are an active trader using Interactive Brokers trading tools, you would see that the implied volatility on the options chain is spiking. The market is suddenly expecting movement. This is a stark contrast to the sleepy, downward drift we have seen for the better part of the last year. The broader context here is the consumer discretionary environment. We know that inflation has been a headache. We know that the average shopper is being more selective. You see this pressure when you look at Tesla stock or Apple stock. Even the giants are having to navigate a consumer that is thinking twice before spending. Nvidia stock might be powering the AI boom, but Vera Bradley lives on Main Street, and Main Street has been hurting. However, there is a counterintuitive argument to be made here. When the economy gets tight, the lipstick effect often kicks in. Consumers stop buying big-ticket items like cars or luxury vacations, but they still want to treat themselves. A $100 handbag or a Pura Vida bracelet fits that psychological need for a reward without breaking the bank. The market might be waking up to the fact that Vera Bradley is actually a defensive play in a recessionary environment, rather than a victim of it. If you are managing your own capital, perhaps through Schwab Intelligent Portfolios or another form of online investment, you have to weigh the risk of a value trap against the potential of a deep value turnaround. Online investing has democratized access to this kind of analysis, but it also creates a lot of noise. You have forums and social media amplifying every tick, but successful self-investing requires filtering that out. Today's move in Vera Bradley is a signal. It's a whisper that the project restoration strategy implemented by CEO Jackie Ardrey might actually be working. The plan was simple: cut the bloat, fix the brand image, and stop discounting the product to death. For a long time, you could walk into an outlet and get 70% off. That moves inventory, but it kills brand equity. The company has been painfully weaning itself off that drug, and sales have taken a hit because of it. That was the pain phase. The $3.11 price we are seeing today might be the first green shoot of the recovery phase, where margins start to expand even if top-line revenue is flat. Let's talk about how different investors are approaching this. If you use Fidelity Investments for your long-term holdings, you might be looking at Vera Bradley's tangible book value. You might be looking at their cash pile and thinking, at this price, I'm buying the cash for free and getting the business for almost nothing. That is the deep value, Graham and Dodd style approach. On the other hand, if you are more of a momentum trader using the Robinhood app or SoFi Investing, you are looking at the chart pattern. You see a double bottom potentially forming. You see the price reclaiming the 50-day moving average. You're not caring about the inventory levels of cotton tote bags. You're caring about the liquidity and the squeeze potential. It is important to acknowledge the role of the platforms themselves in this ecosystem. Investing sites have changed the velocity of these moves. 10 years ago, a stock like Vera Bradley might sit dead for months before a quarterly report moved it. Now, investing help is everywhere, and retail capital can swarm a stock in minutes. We saw it with the meme stock craze. And while Vera Bradley isn't exactly in that same category, the mechanics of individual brokerage accounts flooding into a low-price stock can create self-fulfilling prophecies. If you have a Fidelity brokerage account or use Fidelity Wealth Management, you probably have access to research reports that dig into the institutional ownership. You'll see names like Pleasant Lake Partners. When you see an activist investor with a large stake, you know they are not sitting on their hands. They are pushing for board seats, for strategy changes, or for a sale of the company. That adds a floor to the stock price because there is a persistent bid from a whale who wants to protect their investment. Speaking of platforms, the difference in execution matters. Interactive brokers platform users might be using algorithmic orders to get the best price execution, shaving fractions of a cent off their entry. Meanwhile, someone using Robinhood fractional shares might just throw $50 at it to see what happens. Both valid, but they represent different psychologies. The SoFi active investing crowd tends to be younger, perhaps more familiar with the Pura Vida brand, which is owned by Vera Bradley. Pura Vida was supposed to be the growth engine, the cool beach vibe jewelry brand for Gen Z. It stalled out. If today's move is a hint that Pura Vida has stabilized, then the sum of the parts valuation for Vera Bradley goes significantly higher. I want to pause here and ask you a question because I'm curious about the sentiment on the ground. Comment below how many shares of Vera Bradley you currently hold, or if you used to own a Vera Bradley bag back in the day. Do you think the brand has aged out, or is it due for a retro comeback? I read every comment and it helps me gauge where the real market sentiment is. Now, let's look at the risks. We have to be real. Investment is not about hope, it is about probability. The risk here is that this bounce to $3.11 is just shorts covering before another leg down. The retail landscape is littered with the corpses of brands that couldn't adapt to the digital age. Vera Bradley has a very specific aesthetic. The paisley, the quilting, it's iconic, but it's also polarizing. If they can't attract a new customer under the age of 35, the business slowly shrinks. The Fidelity ETFs and Fidelity mutual funds that hold consumer stocks might be underweighting VRA for this exact reason. They want growth, not a turnaround project. Furthermore, the macro headwinds are not gone. If we get a hot inflation print, or if the Fed signals higher for longer, consumer discretionary stocks get hit the hardest. But there is an asymmetric upside here. Think about invest online strategies that look for cigar butt stocks, companies with one good puff left in them. Vera Bradley is better than a cigar butt. It's a profitable company, on an adjusted basis, with a recognized brand name. If they manage to return to even modest growth, the stock could easily double from here. The multiple compression has been severe. We're talking about a stock trading at a fraction of its sales. If you are using Interactive Broker's stock trading capabilities to look at peer valuations, you will see that even struggling retailers often trade at higher multiples than VRA is commanding right now. Consider the SoFi trading platform users who are looking for the next multi-bagger. They are scanning for low-float stocks. Vera Bradley fits that criteria. With a relatively small number of shares outstanding, it doesn't take a lot of buying power to move the needle. We're seeing that today. A few $1 million of inflow pushes the stock up 8%. Imagine if a broader sector rotation happens. Imagine if money rotates out of overextended tech names and looks for value in beaten-down consumer names. That rotation would act like a tidal wave for a small boat like Vera Bradley. The company's management